just when you thought the rhetoric couldn't get any worse with China. You got to say it like Trump, China. I can't do it very well. But whether we're talking the Evergrande, the Ariana Grande of real estate companies in China, further getting bad news we're going to get into. We're going to talk about the ban of Bitcoin continuing. And then, of course, take a look at your favorite Chinese stocks, whether it's Alibaba or the broader Chinese index funds. So consider hitting that like button, folks. And let's get into what you need to know today. So just going to take a look by, first of all, getting into the China declares all cryptocurrency transactions illegal. Got to say it like that Seth Rogen movie, the MJ one, where they're all in the basement and the government's running it, and the guy doesn't respond well to authority, and he gets on the phone and he's like, "This is illegal." Anyways, virtual currency related business activities are illegal financial activities. The People's Bank of China warning it seriously endangers the safety of people's assets, which is kind of funny because I thought that was the exact purpose of Bitcoin, was to protect people's assets. Basically, let's scroll down because we all know in May that the Chinese state institution warned buyers they would have no protection for continuing to trade Bitcoin and other currencies online as government officials vowed to increase pressure on the industry. In June, it told banks and payment platforms to stop facilitating transactions and issues ban on mining the currencies, the trade of using powerful computers to make new coins. I mean, it's getting worse and worse with them trying to ban Bitcoin, and it is actually tanking the Bitcoin valuation today, pulling it back to about 42,000. I was really hoping for a bigger dip to buy more, but none of this really makes any sense here, folks, because it's a decentralized currency, just like gold. Get it out of the government's hands and in the people's control. And even though they're not going to be able to purchase a Tesla with Bitcoin anymore or transact it, that doesn't mean they can't operate on the blockchain network and continue to mine or basically buy Bitcoin and hold it privately and quietly so the government doesn't find them for it. But nonetheless, folks, we're going to see all of this mining and this huge potential in the cryptocurrency market bleed over into the US. We're going to hear more about that in Canada especially. So other countries are just going to pick the market up. I don't know why China's leaning so heavily against this. It's tanking Ethereum today down 7.76%. And that is the joys of the cryptocurrency market here, folks. But let's talk about China makes preparations for Evergrande's demise. I love these headlines. I always hate Western media's idea of what's going on in China because I always feel like it's always maniacally put together. We got to maniacally talk about China, the Communist Party destroying the entire capital markets. Anyway, Singapore. Chinese authorities are asking local governments to prepare for the potential downfall of China's Evergrande group, according to the officials familiar with the discussions, signaling a reluctance to bail out the debt-saddled property developer while bracing for any economic and social fallout from the company's travails. So basically, they're getting ready for a storm or a possible storm because, again, this is like one of the largest, or was one of the largest real estate developers in China, guys. I mean, take a look at it. It's down to $2.36 Hong Kong dollars here, trading down, 11% today. But if we zoom out to the year to date, down 83%, giving it a $31 billion market cap again in this currency. But could you imagine if it was up 83%? This would be a multi-$100 billion company, right? And it just absolute pure destruction that is now bleeding into the rest of the markets, not hitting the U.S. markets as much today, but we are seeing a bit of a bleed down. And Federal Chair Jerome Powell mentioned in the interview yesterday that they don't think Evergrande will truly bleed into the U.S. markets. There's no real financial ties in that way. But if we take a look again at some of the larger index funds in China, like the Consumer Discretionary ETF, one I talk about a lot, is down 22% year to date. And this should be like one of the staples because, I mean, we consider consumer staples here to be that kind of investment, right? A stable investment. But clearly, it's not doing so well. We're taking a look at the China Clean Technology Index, down 6.4% year to date. Not as bad. A lot of people know that China's heavily leaning into that, so I guess it's kind of cushioned against some of this rhetoric. You got China's Internet ETF trading down 38.7%. You got the Chinese small cap ETF trading up or relatively flat for the year. Nothing crazy going on there. And then, of course, our favorite stock, Alibaba, hitting new lows today at $145 a share. As many of you know, I scaled down my mother's position by 50% in this holding. I would be really curious to see what Charlie Munger's doing with his position. Ray Dalio owns a really large position of Alibaba, and I'm curious if they've slimmed back. Have they scaled them further forward? That is some stuff I'm going to have to look into. If that's something that you know something about already, let us know anything that you have entailed in that comment section below, because this is a scary time for China. China is in a true bear market crash. I mean, this is one of those moments, guys, and it comes down to whether you have the guts to stomach it. You want to buy the dip. I'm not buying the dip here, guys. I'm going to wait until this rhetoric turns around and then maybe pick it up on the rebound. But it hurts. It hurts that it doesn't stop, and I just can't get over that the Chinese government continues to let the falter of the financial markets continue this way, because you've got to imagine imagine the amount of capital that is just evaporated for their global economy through this cycle. And I'm looking forward to when we finally start seeing a light on the other side of the tunnel. But from where it stands now, if you're holding these kind of big Chinese companies, yeah, they got great balance sheets, but I would not be buying more. I would be cushioning, maybe getting some short puts against it just to protect it. Not that I don't know how much lower it can go, but never forget, it can always go lower. This is why I sold my mom's position down slightly, because people forget stocks can get down a lot, but they can always go lower. So in light of this, I'm going to pass the question off to you guys again. Let me know what you think. Stay cool, stay awesome, and we'll catch you in the next one.